Welcome to another video. In this video, we'll discuss the several ways in which you as an individual can invest in gold. Well, because of inflation or increase in prices, the purchasing power of an individual comes down or decreases, because of which, as a commodity, cash or money loses its value. But on the contrary, gold acts like a perfect hedge for inflation. And predominantly, the value of gold just keeps rising year on year. And that is why it is a great asset to bet on, to invest, to buy for, especially during times of economic depression. Well, coming to the first way of buying gold, and that is in the form of jewelry, basically only for the purpose of usage. Apart from that, you have a lot of negatives associated with jewelry. One, there's an element called as making charges, which adds on to the final selling price of gold, and this starts with a minimum of 10%. In addition to this, because jewelry comes in the physical form, you need to find a place to store it, and therefore storage cost is also incurred. Basically, you need to open a gold deposit locker with a bank, and if you're in a metro city and the locker is quite big, then the banks could charge you somewhere between 10 and 12,000 rupees in a year minimum for the rental cost. Purity is again doubtful here. It is of no guarantee because of course you cannot buy gold in 24 karat. The minimum that you can buy would be in 18K or 22K, and therefore purity becomes questionable in this form of gold. Well, to understand the levy of making charge, let's just take the case of an example. Let's say for 10 grams of gold, the cost right now is 52,000 rupees. You add a making charge of 10% and now the cost becomes 57,200, to which GST of 3% is charged, and this is across for all types of gold, whether it is in the form of digital or physical, the GST of 3. And this comes to 58,916 or almost 59,000. Something which costs 52,000 rupees for 10 grams of gold is now 59,000 rupees, and that is because of the major element called making charges, which in this case is 10%. So because of a lot of negatives involved, the making charge, the purity, the storage cost that is involved in terms of the minimum monthly rental that you have to pay, jewelry does not become a viable mode of investing in gold. Coming to gold bars or gold coins, well, definitely it takes care of two major limitations that jewelry had. One, there's no making charge involved because it comes in pure gold form or coin form. Purity is guaranteed here because there's no need for converting into jewelry or modifying into any other type of gold. It comes with 24 karat gold itself. But a common limitation aligning with jewelry is the fact that you need a place to store the gold bars or gold coins. That is why storage cost is quite high when it comes to gold bars. And that again is the reason why gold bars would not be the ideal or the smart way of investing in gold. Well, coming to the first smart way, and that is to invest in gold digitally by way of a bank account. In other words, the E form of physical gold. You basically open a bank account and then you transfer funds from your bank account into the digital gold account, and then whenever you want to withdraw funds, you can do the same thing. It takes care of the purity because again you're investing in digital gold, and that too into 24 karat gold. And unlike gold bars and jewelry, which was a limitation there is absolutely no storage hassles involved in digital gold because it comes in digital form. But a hidden catch, or the hidden item here, is basically the commission or fee that is involved. Now, Safe Gold is basically a private company which is dealing with the investments in digital gold, and they use Axis Bank as a major facilitator for depositing, withdrawing, investing in digital gold. And because facilitators like banks are involved, there is an element of commission or fee that is involved here. Coming to the advantages, digital gold is highly liquid, which means basically you can sell any amount of grams for rupees, get back the funds into your bank account at that rate of gold which is prevailing on that particular date. You can even start a SIP plan with investing in digital gold with a minimum starting of rupees 10, either in rupees or in grams. But on top of all this, the best advantage here is that at a later point in time, when you've accumulated substantial amount of investment in terms of grams, you can exchange digital gold with physical gold. making it a really good smart way of investing in gold. The next one is basically gold ETFs, otherwise known as exchange traded funds. These are funds available in the market for which you basically need a demat account to invest in. You directly invest in ETFs, and then the price of ETF, unlike digital gold, will move according to the price of gold. If gold is going up, the value of ETF will go up. If gold is going down, the value of ETF will go down. And therefore, to purchase 1 gram or 1 unit, you'll have to really look at the gold price and then find out which is the right time to invest in ETFs. Again, it is highly liquid here because it is market traded funds, and the cost is quite less because unlike digital gold, there is no facilitator involved, there is no commission, there is no concept of fee that is involved here. Coming to a similar form of investment, and that is gold mutual funds. These are again funds available in the market for which again you'll have to have a demat account, and these mutual funds further invest in ETFs. So they have a pool of funds which they gather, and then from that pool, the fund manager will find out at what particular point in time they need to invest in the ETFs. For example, Axis Bank has a mutual fund for gold, and if you look at the major holding of that mutual fund, it is basically Axis Bank Gold ETFs. So a mutual fund will have a major investment in the ETF. But unlike the ETF, you really don't have to bother about the price of gold. Here, in the case of mutual funds, it is dependent on an item called net asset value, and to purchase 1 unit of mutual fund will depend upon the value or the cost or the price of NAV on that particular day. Even when you have to sell the mutual fund, it will depend upon the NAV on that particular day. Cost is quite high surprisingly here because there's something called the expense ratio, or the money that you basically pay the fund manager, because he will basically use his brains to find out at what point of time he needs to invest the pool or the money that is lying in the mutual fund into the ETFs. And this does not apply to ETFs. In ETFs, you basically directly invest in it and it gets traded according to the gold prices. So ETFs and mutual funds are definitely a smart way of investing in golds, with ETFs being a much viable option. Coming to the last one, and that is the sovereign gold bonds or SGBs. These are bonds basically issued by the government, hence it's safe. They come in tranches, therefore it is not available always. You have 2 tranches which normally comes in a year. It has a maturity period of 8 years, beyond which if you sell, it comes with a tax benefit. That is basically if you hold SGBs for 8 years and then you sell it, there is no capital gain tax that is involved, unlike in other forms of gold, whether it is in the form of jewelry, digital gold, gold bars, ETFs, and even mutual funds. If you redeem it or sell them, you have to pay something called as capital gain tax, either long term or short term. But in case of SGBs, the attractive option here is that the fact that if you hold it up to 8 years and then sell SGBs, there's absolutely no tax on it. Again, coming to the returns, you not only get a gold appreciation rate here that is pegged to the SGBs, but you also get a 2.5% fixed rate of interest because it is a government traded fund. So here you get, let's say your gold appreciation was 5% and 2.5% is the interest rate, you get a total of 7.5% per annum interest, which makes SGBs quite attractive. Well, I hope I was able to make things clear through this particular video. If you like the video, please do show your support to us by hitting the like button. If you want more videos like these on a regular basis, short form videos, then also please do show your support to us by hitting the subscribe button. Till then, I'll see you guys in the next video. Take care and thank you.